Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. We're going to get you what you need to know before you go, and that's going to start out with the economic data, see how that impacts the overall markets with some of my market analysis, and then finally we'll wrap it up with rounding off some geopolitical fodder to see how that forces the markets in either direction. We're getting a lot of that these days because we're not really getting the economic data that would cause a market rollover here. We've seen pretty decent manufacturing, even the PMI numbers, Purchase Managers Index, forward looking, very strong there, at least compared to what we're hearing on TV for the most part, with the markets melting down. Here in the United States again, well, actually not in the United States. We did get the United States National Federation of Independent Businesses, which is a small business index. Pretty important because that's going to really be the thing that drives this economy, is the small businesses, especially right now. Coming in line at 93.2, expected to be 92.9, so a little bit higher even. The German zoo economic sentiment, anything above 0 is optimism, anything below is pessimism. We were looking at pretty pessimistic numbers here in the negative 40s for this number, but we got negative 29.5, better than the negative 43, and the German zoo economic sentiment, the other one was for the broader European region, but for German specifically, it comes in at 34.3, expected to be 43. So much better than I would have even expected, especially with the turmoil we're seeing going on with Russia invading Ukraine. Germany, big economic driver is Russia for them. So with that pullback, we're not really seeing the kind of numbers I would have expected, really. So let's take a look at the overall markets here and see how they're getting impacted today. Yesterday, we talked about this. It looked like a pretty good day for setup candles, waiting for confirmation. Well, we didn't get that at all. So I'm saying, folks, right now, despite the fact that I'm one of the more aggressive traders, even myself, or even I am waiting for confirmations. I need to make sure we break out of this negative pattern before I start really looking to add anything. So with that said, let's get on talking about this, because the major markets really aren't doing a whole lot here. We've got bonds moving a little bit higher. That's just basically what we were talking about, the levers and pulleys of the markets yesterday. If the equities are really going to sell off, one of the places that folks are going to park their money to store value is the bonds. Now, we've talked about this. As interest rates rise, the price of bonds goes down. That's a pretty painful process if you're parking your money in something you know you're going to lose money in. So more often than not, I would rather see this influx of cash go into things like gold futures, or gold actually, or gold futures for that matter. A lot of folks would expect to see Bitcoin get a little bit of a bounce here if it is going to be something that is a investable asset and needs to find some support when some of these other ancillary markets are falling out of bed. And we got gold finding support, but not necessarily here in Bitcoin, right? We're seeing money fly into gold, into bonds. We really wouldn't necessarily expect to see the bonds, but it is a store of value. I thought we would probably see a little bit more push on Bitcoin, not really getting that today. VIX making some massive spikes. Looks like we're holding on to the 30s for a little while, because I don't think we're out of the woods on the downside here. What we're looking at here with these Fibonacci's is 2016 low to the the pandemic high, let's just call it. And now you can see with the NASDAQ, we've come back down, tested that level of 12,500, something we were talking about with that NASDAQ would see more of a exacerbated move to the downside, as some of the tech stocks were not going to do very well in this type of environment. I've talked about staples doing well, holding on to those, stick with the in the Dow Jones Industrial Average. These are staying power, really, because they're the big dogs in the markets. We got Big Blue in there and a couple other ones. Try to find it one day. Here you go. We can see we've come back down to this 123 extension. I've got the Fibonacci from just before the pandemic to the pandemic low with measured moves higher there. One thing to note here, we have not revisited the pandemic. Sorry, I did not want to do that. Now I'm not going to be able to figure out how to do this on the get rid of that. I just don't want this at all. Anyway, how do I, sorry folks, you're seeing me fumble here and I don't want this at all. I just want to get rid of it. All right, just the chart, get rid of that, get rid of that, go to the chart. There we go. All right, folks, one thing I wanted to note with this is drop it into a 1-year chart just to give you a little bit of idea. Comparing apples to apples, here is that pandemic move, that basic bounce. We're a little bit below that right now. So where's the next point to revisit is probably around this 11,200. That is going to really start giving folks some shivers, I guess, as we start making that type of correction. I think that if that starts happening, we'll see the pandemic high here in the Dow Jones Industrial Average. I could still think that the Dow Jones is going to be the retainer here and hold up a little bit better than the rest of the broader markets in the equities, that is anyway. We can see E-mini S&Ps breaking down here. Let's just compare apples to apples and get this into a 1-year chart. You can see well off. I did not have this lined up on the pandemics there. As a matter of fact, why don't we just try and do this, see if we can get some extensions going on. That's going to be a line chart. Let's get to the, come on. See if I can get this going real quick. I'm going to make it dirty. Oh, I don't want that. Fine. All right. Anyways, you can see the extensions now for the 116. We've broken through the 161 there. The next level, really, I could add in a couple more. It's probably closer to this 23 there. So a couple of lines going to be lining up with that number. That could be the next stop for E-mini S&Ps. I don't see us breaking out of this negative pattern anytime soon, folks. So covered calls with this high volatility is really what you need to be looking at on any types of rips for the near-term future anyway. And that's about it, folks. Running a little late today. Got a couple of things I want to do. Haven't seen anything in the markets because I really don't want to start throwing in short puts in there to start adding if we're going to go another leg down. If the market starts thinking that we're going into a recession here and that we could have hyperinflation tagged to that, well, the market isn't going to stop at those pandemic highs, all right? So we're going to just revisit those and maybe push a little bit lower. That would be the time to start adding, I think, stocks to our portfolio. All right, so if you can't take that, take it easy. Hey, don't forget to smash that like button before you go.